The global financial system is about to undergo the biggest transformation in 50 years, and most people have no idea it's happening. Right now, as you're watching this video, banks, central banks, payment processors, and financial institutions around the world are implementing a new standard that will fundamentally change how money moves across the planet. And here's the crazy part. This isn't some future prediction. This is happening right now. Welcome back to Crypto Journal. Today, we're diving deep into ISO 20022, the new global standard for financial messaging that's going to revolutionize everything about payments. And I'm not using the word revolutionize lightly. By the end of this video, you'll understand why this is one of the most important developments in finance, and why the trends that emerge from this could create massive opportunities for those who understand what's coming. Let me start with a question. When was the last time you really thought about how money moves? Not just tapping your card or sending a Venmo payment, but the actual infrastructure behind it. Most people never think about this because it just works. You send money, it arrives, done. But underneath that simple action is one of the most complex systems ever built by humanity. And that system is running on technology from the 1970s. Think about that for a second. The protocols that move trillions of dollars around the world every single day were designed when people were watching black and white TVs, when computers filled entire rooms, when the internet didn't exist. These systems have been updated and patched over the years, sure, but they're fundamentally built on outdated architecture. It's like trying to run modern software on a computer from 50 years ago. It works, but it's slow, it's limited, and it can't do half the things we need it to do. That's the world we're leaving behind. And ISO 20022 is what we're moving into. So what exactly is ISO 20022? At its core, it's a global standard for electronic data interchange between financial institutions. That sounds boring and technical, I know, but stay with me because this is where it gets interesting. The old system, which most banks have been using, is called SwiftMT. SwiftMT messages are structured in a very rigid, limited way. They can only carry basic information. Who's sending money, who's receiving it, how much, and a short description. That's basically it. The messages are limited to a specific format with very little flexibility. It's like sending a telegram with a character limit. You can communicate the basics, but you can't provide detailed information. ISO 20022 is completely different. Instead of rigid, limited messages, it uses a rich, structured data format based on XML. This means it can carry vastly more information. We're not just talking about who sent money and how much. We're talking about detailed remittance information, structured addresses, tax information, invoice details, purchase order numbers, regulatory codes, everything you could possibly need to know about a transaction. Let me give you a concrete example. Imagine you're a business and you receive a payment from a customer using the old SwiftMT system. You get notification that money arrived in your account, and maybe there's a reference number or a short description. But you don't automatically know which invoice this payment is for. You don't have detailed information about what products or services this covers. Your accounting team has to manually match this payment to the correct invoice, figure out what it's for, and reconcile everything. This manual process costs time and money. Now imagine the same payment under ISO 20022. The payment arrives, but now it includes structured data with the invoice number, the purchase order number, detailed line items showing exactly what products or services were paid for, tax information, everything. Your accounting system can automatically match the payment to the correct invoice, reconcile everything, and update your records without any manual intervention. No human has to touch it. It just works. Multiply that efficiency gain across millions of transactions, and you start to understand the magnitude of what we're talking about. This isn't a small improvement. This is a fundamental transformation of how financial data flows through the global economy. But here's what makes this really exciting. We're not just talking about a theoretical standard that might be adopted someday. ISO 20022 is being implemented right now by the most important financial institutions in the world. SWIFT, which handles the majority of international bank transfers, started its migration to ISO 20022 in November 2022. As of 2024, the transition is well underway, and by 2025, it's becoming the dominant standard. The Federal Reserve launched FedNow in 2023, and it's built on ISO 20022. The European Central Bank's Target 2 system, which is one of the largest payment systems in the world, migrated to ISO 20022. The Bank of England, the Monetary Authority of Singapore, the Reserve Bank of Australia, all of them are implementing ISO 20022. This is not a niche development. This is the entire global financial infrastructure upgrading at the same time. And here's why the timing matters. When you have a global migration like this, when everyone is upgrading their systems simultaneously, it creates a unique window of opportunity. New technologies can be integrated. New business models can be built. New players can enter the market. The rules of the game are being rewritten, and that creates opportunities for innovation that wouldn't exist in a stable, mature market. So let's talk about the trends that are going to emerge from this. Let's talk about how ISO 20022 is going to revolutionize the world of payments and what new possibilities are opening up. First major trend, real-time payments become the global standard. Right now, international payments are slow. If you send money from the United States to Europe, it typically takes 2 to 3 business days to arrive. If you send money to Asia or Latin America, it can take even longer. Why? Because the old SWIFT MT system requires multiple intermediary banks, each one processing the transaction in sequence, each one adding time and cost. With ISO 20022 and the infrastructure being built around it, we're moving toward a world where international payments can settle in real time or near real time. The Federal Reserve's FedNow system already enables instant payments domestically in the US. The European Central Bank's instant payment system does the same in Europe. And because these systems are built on ISO 20022, they can potentially interoperate with each other. Imagine a future where you can send money from New York to Tokyo and it arrives in seconds, not days. Where businesses can pay international suppliers instantly. Where freelancers working for companies on the other side of the world get paid in real time for the work they do. This is not science fiction. The infrastructure to enable this is being built right now. And here's the kicker. Once real-time international payments become possible, it changes everything. It changes how businesses manage cash flow. It changes how people work across borders. It changes the economics of international trade. Companies won't need to maintain large cash reserves to cover the delay in receiving payments. Working capital becomes more efficient. The entire global economy becomes more liquid. Second major trend, automated reconciliation and straight-through processing. This is going to transform corporate treasury and accounting. Right now, companies spend enormous amounts of time and money on payment reconciliation. When payments come in, someone has to figure out what they're for, match them to invoices, update accounting systems, verify that everything is correct. This is manual, time-consuming, and error-prone. With ISO 20022's rich data structure, reconciliation can be automated. Payment data includes all the information needed to automatically match payments to invoices, update ledgers, and reconcile accounts. This is called straight-through processing, where a transaction flows from initiation to final settlement without any manual intervention. The cost savings here are massive. Large corporations process millions of transactions per year. If you can automate reconciliation, you're saving countless hours of human labor. But more importantly, you're reducing errors. Manual processes always involve mistakes. Payments get misapplied, invoices get lost, reconciliation takes weeks. Automation eliminates most of these problems, and this creates opportunities for new software companies. We're going to see a wave of fintech companies building tools that leverage ISO 20022 data to provide better treasury management, better cash flow forecasting, better working capital optimization. The companies that figure out how to extract value from this rich payment data are going to build huge businesses. Third major trend, embedded finance and invisible payments. Here's where it gets really interesting. When payment data becomes rich and standardized, you can embed payments into other processes seamlessly. Right now, payments are often a separate step. You do something, then you make a payment, then you confirm the payment, then you reconcile it. Multiple steps, multiple systems. With ISO 20022, payments can become invisible. They can be embedded into business processes so seamlessly that users barely notice they're happening. Imagine you're using supply chain management software. When a shipment reaches a certain milestone, payment automatically flows to the supplier with all the necessary data included. No one has to initiate the payment manually. No one has to send an invoice. No one has to reconcile anything. The software systems communicate with each other using ISO 20022 messages, and money flows automatically. This is going to enable entirely new business models. We're going to see programmable payments tied to real-world events, smart contracts that execute automatically when conditions are met, payment streams that flow continuously rather than in discrete chunks. The possibilities are enormous. Fourth major trend: financial transparency and regulatory compliance. One of the biggest challenges in international finance is compliance. Banks and financial institutions are required to screen transactions for money laundering, terrorist financing, sanctions violations, and other illicit activity. Under the old system, this is difficult because payment messages don't contain much information. Compliance teams often have to manually investigate transactions to determine if they're legitimate. ISO 20022 changes this completely. Because payment messages can include detailed structured data, compliance information can be embedded directly into the transaction. The payer's full details, the recipient's full details, the purpose of the payment, supporting documentation, everything a compliance officer needs can be included in the message. This makes compliance more efficient and more effective. Automated systems can screen transactions more accurately because they have more data to work with. False positives decrease. Legitimate transactions flow through faster, and illegal transactions are easier to detect and stop. This trend toward embedded compliance is going to accelerate. We're going to see AI-powered compliance systems that analyze ISO 20022 data in real time, flagging suspicious patterns and allowing legitimate payments to flow through instantly. The financial system becomes more secure while also becoming more efficient. Fifth major trend: cross-border e-commerce explosion. Right now, cross-border e-commerce is growing rapidly, but it's hampered by payment friction. When someone in Brazil wants to buy something from a seller in Germany, the payment process is complicated. There are currency conversions, international payment fees, delays in settlement, and uncertainty about whether the payment will arrive. ISO 20022 is going to make cross-border e-commerce much smoother. With real-time international payments, standardized data formats, and lower costs, buying from another country will become as easy as buying domestically. Sellers will receive payments instantly with all the necessary information to fulfill orders. Buyers will have confidence that their payments will be processed correctly. This is going to unlock enormous growth in global commerce. Small businesses will be able to sell internationally without dealing with the complexity of international payments. Consumers will have access to products and services from around the world. The global marketplace becomes truly global. And this creates opportunities for payment service providers who can build bridges between different countries' payment systems. Companies that can enable seamless cross-border payments using ISO 20022 are going to capture huge market share. Sixth major trend: central bank digital currencies and the tokenization of money. Here's where traditional finance and crypto start to converge. Many central banks around the world are exploring or actively developing central bank digital currencies, which are basically digital versions of national currencies issued directly by central banks. And guess what standard most of these CBDCs are being designed around? ISO 20022. Why? Because central banks want their digital currencies to interoperate with existing payment systems. They want banks to be able to integrate CBDCs into their infrastructure without having to build entirely new systems. Using ISO 20022 as the messaging standard makes this possible. This is massive because it means that as CBDCs roll out, they'll be compatible with the same infrastructure that's being built for traditional payments. A bank could handle both traditional account-based payments and CBDC transactions using the same systems, the same data formats, the same processes. But it goes beyond just CBDCs. We're going to see tokenization of all kinds of financial assets. Securities, bonds, real estate, commodities, all of it can be tokenized and moved on blockchain rails. And if these tokenized assets use ISO 20022 for messaging, they can integrate with traditional financial systems. This is the bridge between crypto and traditional finance that everyone's been talking about. ISO 20022 is the common language that allows both worlds to communicate. You could have a transaction where someone pays for tokenized real estate using a CBDC, and the entire transaction settles instantly with all the necessary regulatory data included in ISO 20022 format. Seventh major trend, the rise of super apps and financial ecosystems. In Asia, super apps like WeChat and Alipay have already transformed how people interact with money. These apps combine payments, banking, investing, shopping, and services all in one place. They're incredibly convenient, and they've achieved massive adoption. In the West, we haven't seen the same level of super app adoption, partly because the underlying payment infrastructure has been fragmented and limited. But ISO 20022 changes this. With standardized, rich payment data, it becomes much easier to build integrated financial ecosystems. We're going to see companies building super apps that leverage ISO 20022 to provide seamless financial experiences. Imagine an app where you can send money internationally, pay bills, manage investments, get loans, purchase insurance, and shop all in one place. And because everything is built on ISO 20022, all these services can communicate with each other and with external systems seamlessly. The companies that figure out how to build these ecosystems are going to create enormous value. We're talking about the potential for entirely new financial giants to emerge, companies that didn't even exist a few years ago, but that leverage ISO 20022 to build better user experiences than traditional banks can offer. Eighth major trend, artificial intelligence and payment optimization. Here's something that doesn't get talked about enough. ISO 20022 creates a massive amount of structured payment data. And structured data is exactly what AI systems need to learn and optimize. We're going to see AI systems that analyze payment patterns to optimize cash flow, predict liquidity needs, detect fraud, recommend payment timing, and automate financial decision-making. Right now, this is difficult because payment data is messy and unstructured. But with ISO 20022, you have clean, structured data that AI can actually work with. Imagine a corporate treasury system that uses AI to analyze your company's payment patterns and automatically optimizes when to make payments, when to receive payments, how to manage currency exposure, all based on millions of data points from ISO 20022 messages. This kind of intelligent automation is going to provide massive competitive advantages to companies that implement it. And we're going to see entirely new categories of fintech companies built around AI-powered payment intelligence. Companies that can help businesses make smarter financial decisions by analyzing the rich data available through ISO 20022. Ninth major trend, financial inclusion on a global scale. One of the most exciting possibilities of ISO 20022 is its potential to expand financial inclusion. Right now, billions of people around the world are unbanked or underbanked. They don't have access to traditional financial services, partly because the infrastructure to serve them doesn't exist or is too expensive. ISO 20022 enables new business models that can serve these populations. With lower costs, real-time payments, and standardized data, fintech companies can build services for people who were previously excluded from the financial system. Mobile money can integrate with traditional banking systems. Microfinance can operate more efficiently. Cross-border remittances become cheaper, which directly benefits people in developing countries who rely on money sent from family members abroad. We're going to see a wave of innovation focused on financial inclusion, leveraging ISO 20022 to provide services that weren't economically viable before. This has the potential to lift millions of people out of poverty by giving them access to financial tools that enable them to save, invest, and build businesses. 10th major trend, the emergence of payment data as a service. Here's a trend that's not obvious, but could be huge. With ISO 20022, payment data becomes much more valuable because it's structured and rich. This data contains insights about economic activity, supply chain flows, consumer behavior, everything. We're going to see companies that specialize in aggregating and analyzing payment data to provide insights. Banks could offer anonymized, aggregated payment data to help businesses understand market trends. Governments could use payment data to get real-time views of economic activity. Investors could use payment data to identify growing companies or changing consumer preferences. Obviously, this has to be done in a privacy-preserving way. Individual transactions must remain confidential, but aggregated, anonymized payment data could be incredibly valuable. And ISO 20022 structured format makes this kind of analysis possible in ways that weren't feasible before. Now let's talk about what all of this means for the crypto industry. Because here's the thing, ISO 20022 isn't just a traditional finance development. It has massive implications for crypto adoption. Many cryptocurrency projects are now focusing on ISO 20022 compatibility. Why? Because if a crypto network can send and receive payments using ISO 20022 messages, it can interoperate with traditional financial systems. Banks can integrate crypto payments without having to build entirely new infrastructure. Payment processors can handle both traditional and crypto transactions using the same systems. This is the key to mainstream adoption. Crypto doesn't need to replace the existing financial system. It needs to integrate with it. And ISO 20022 provides the bridge. We're going to see crypto projects that position themselves as payment rails that happen to use blockchain technology, but that speak the language of traditional finance through ISO 20022. Projects that get this right, that build technology that's both innovative and compatible with existing standards, are going to capture enormous value because they're not asking institutions to choose between crypto and traditional finance. They're offering the best of both worlds. Let's also talk about stablecoins in this context. Stablecoins are cryptocurrencies pegged to traditional currencies, usually the US dollar. They're already being used for payments, especially in cross-border transactions. But there's been regulatory uncertainty about how stablecoins fit into the existing financial system. ISO 20022 compatibility could be the answer. If stablecoin transactions can be formatted as ISO 20022 messages, with all the necessary compliance data included, then stablecoins can be treated like any other payment method by banks and regulators. They become less scary because they fit into existing frameworks. We're likely to see stablecoin issuers implementing ISO 20022 compatibility to facilitate integration with traditional banking systems. This could accelerate stablecoin adoption dramatically because it removes one of the main barriers, the perception that stablecoins operate outside of the regulated financial system. Now, I want to address the challenges and risks. Because as exciting as all of this is, implementing ISO 20022 is not simple. It requires significant investment in new systems and infrastructure. Banks and financial institutions have to upgrade their technology, train their staff, and test extensively to ensure everything works correctly. There's also the challenge of interoperability. Just because everyone is using ISO 20022 doesn't automatically mean that all systems can talk to each other seamlessly. Different countries might implement ISO 20022 slightly differently. Different institutions might interpret the standard in different ways. Getting true global interoperability is going to take time and coordination. And there are cybersecurity concerns. Anytime you have a new system handling trillions of dollars, it becomes a target for cyber criminals. The financial industry has to ensure that ISO 20022 implementations are secure, that data is protected, that fraud prevention measures are in place. But despite these challenges, the momentum behind ISO 20022 is undeniable. The world's major financial institutions are committed to this transition. The benefits are too significant to ignore. And once the infrastructure is in place, the innovations that will be built on top of it are going to transform how we think about money and payments. So what should you be paying attention to? If you're an investor, watch for companies that are building products and services around ISO 20022. Fintech companies that can leverage this new infrastructure. Crypto projects that are implementing ISO 20022 compatibility. Traditional financial institutions that are leading the transition and finding ways to innovate. If you're a business owner, start thinking about how ISO 20022 will affect your operations. Are there opportunities to improve your payment processes? Can you reduce costs by automating reconciliation? Should you be working with payment providers that support ISO 20022? If you're a developer or entrepreneur, this is a greenfield opportunity. The infrastructure is being built right now, and there's enormous potential to create new applications, new services, new business models on top of ISO 20022. The companies that figure out how to extract value from rich payment data are going to build the next generation of financial technology. Looking forward, I believe we're going to look back on this period as a turning point. The shift to ISO 20022 is going to enable innovations that we can't even fully imagine yet. Just like the internet created possibilities that weren't obvious in the early days, ISO 20022 is creating possibilities for financial innovation that will only become clear as the infrastructure matures. We're moving toward a world where payments are instant, where financial data flows seamlessly between systems, where cross-border transactions are as easy as domestic ones, where compliance is automated, where new financial services can be built rapidly because they're all speaking the same language. This is not just about making existing processes a little bit better. This is about fundamentally reimagining what's possible with money and payments. And that should excite everyone, whether you're in crypto, traditional finance, fintech, or just someone who uses money in their daily life. The payment revolution is here. ISO 20022 is the foundation, and the trends emerging from this are going to reshape the global financial system for decades to come. The question is not whether this is going to happen. It's already happening. The question is who's going to build the innovations that define the next era of finance. That's it for today's deep dive on Crypto Journal. If this video helped you understand ISO 20022 and its massive implications, hit that like button and subscribe for more content on the future of finance. Drop a comment below and tell me which trend you think is most exciting. Are you bullish on real-time payments? Do you think CBDCs are going to change everything? What innovations do you think will be built on top of ISO 20022? I want to hear your thoughts. Thanks for watching, and I'll see you in the next one.